So as I said, we'll be taking a look at how the first quarter of the year fared for the markets and the economy in general. I'm being joined on the program by Doyinsola Afolabi, who's an investment analyst with AfriInvest. Good morning to you, Doyinsola. It's great to have you join me on the program today.
Good morning, Harriet. Thank you.
And yes, so it's a fine way for us to end the month. It's the last trading day for the month of March, the last trading day for the month, for the week and for the quarter. But taking a look at how the markets fared generally, would you say that it was more bullish, bearish, or there was a lot of tepid, sentiments from investors?
Looking at the Q1 2017, it was bearish. The index is down 5.0 year to date, looking at the quarter. Compared to the last quarter, Q4 2016, it was down 5.2%. So yeah, it was still bearish, but a slight improvement in the market. You look at how 2016, Q4 2016 fared, you see that the market started off before as a result of the weakened investor sentiment, an account of weaker corporate earnings releases from Q3 2016, which then affected the market. If you look at November, the ASI hit a 5-month low in November, and then we had 6 consecutive weeks of decline in November 2016 from October to November. But then we saw a rebound in December. I think that was when we had renewed interest in oil and gas stocks, banking stock, and so we also had, the oil prices. Oil price rallied around that period. Then we saw like a December rally where portfolio managers and fund managers tried to balance your portfolio at the end of the year. So yeah, the major boost we saw was in December. But then looking at the Q1 2017, what we saw at the beginning of the year, at the beginning of the quarter, was profit taking because of like I said, the ASI had hit a 5-month low. That automatically means the cheap valuation of stocks. So you had investors in December also, bargain hunting on most of the stock. So by Q1 2017, they started to book profits on the stocks that are bought in December. But then FY 2016 earnings started to trickle in.
Okay, but we also noticed that for the first quarter there was more listings on the Nigerian Stock Exchange. That was a plus. It also showed that investors were beginning to have more interest in the market. Yes.
Investors were beginning to have more interest on the market as at Q1 2017. Apart from that, looking at the macroeconomic variables, they've started to improve as well. The oil prices have gone up, and then you look at oil production volume at 2.2 million. You look at FX, the CBN is doing a lot to improve that segment, and then you look at you also look at the GDP as well compared to the previous first 3 quarters of 2016.
All right, so that's for the equities market. What about for the fixed income segment of the market? That also saw renewed investors' appetite, and then of course with the bonds auction, the central bank selling T-bills as well. It was quite a busy quarter. Yes,
it was. Well, I mean, like we've always said, investors have always shifted focus to the fixed income bits, and they've decided to snub the equities market and attractive yields, new savings bonds, investment. The treasury bills are still in double digits. The money market rates are high. I mean, it's just safer for investors to stay in the fixed income market. Most of them will go to the equities market just to position themselves for the dividend payments, and after getting those dividend payments, they move back to the fixed income market, and I think that's going to be the trend from medium to short term.
So you mentioned inflation, you mentioned GDP, but also in this quarter we saw the release of the Economic Recovery Growth Plan. How much of an impact did this have on the markets?
Well, for inflation and GDP, it had a neutral effect. I mean, there were no surprises that inflation has been on an uptrend for a while. But for February, obviously, there was a moderation, which we would start to see going forward. But then, investors must have factored in the rise in inflation over time and then the GDP contraction over time. So there are no surprises for investors. So, I mean, it had a neutral effect on the market.
But what about the economic recovery group?
Yeah, the recovery obviously is a growth plan for the economy. And then by the time the listed you know, the SMEs, driving SMEs, electricity, the transportation, everything the government starts to actually roll out these plans. We start to see an improvement and, you know, start to boost investors' sentiment over time.
So what do you think the markets will be looking for as we start a new month and a new quarter?
Well, for March, as of March, we still have two tier 2 banks that haven't released their reports, and we still have some tier 1 banks that haven't released their reports. You know, FBN and ETI, and a couple of tier 2 banks as well. So yes, we'll still be expecting those reports. But then you need to look at the macroeconomic variables. The oil production 2.2, the FX is improving. So obviously, investors will expect to start to see this effect on companies' results, not immediately for Q1 when they start releasing their report, because companies will start releasing the reports for Q1 2017. But we don't expect to see a huge jump, right, in companies' results. So yes, maybe a slight improvement in companies' results, in their profitability, the cost of production. You start to see an improvement, and then for Q2 they start to expect more improvement. So for this improvement in oil production volume is sustained. The FX challenges have been, you know, maintained, and all these things. The GDP starts to, you know, improve, and all this, you know, variables, you know, would
what about investors' appetite for the fixed income segment? The Debt Management Office is yet to release the bond issuance calendar for the second quarter, but in line with what we've seen in the first quarter and previously, we know that it's going to be a substantial amount. Are you expecting to see well, heavy subscription of these bonds when eventually they come on the market?
Yes, definitely. We don't, despite the fact that investors might start to expect that the equities market, companies' results will start to, you know, show some form of improvement. You don't expect investors to just jump into, you know, this equities market. There'll still be in the fixed income space. There'll still be a lot of oversubscriptions from time to time, and you know, because of the attractive yields and the tenor. Shorter tenor instruments, I mean, yes, we still expect them to be.
So your general outlook for the second quarter will be what, bearish, bullish, or tepid?
Maybe tepid. You know, I mean, we still expect investors to you know, play short-term equities, but I mean, have a longer view of, you know, fixed income markets, fixed income segment.
Doyin Sola Afolabi, investment analyst with AfriInvest. Many thanks for coming on the program this morning.